Good morning to all. Budgetary and non-budgetary control techniques are going to be discussed in this video. Important questions in Principles of Management Unit 5 are Steps in Controlling Process. Second question, Budgetary and non-budgetary control techniques. Third one, Use of computers and IT in management control. Fourth one, Productivity improvement techniques. Let us discuss about the budgetary and non-budgetary control techniques in this video. So techniques of control, there are traditional techniques and modern techniques. Traditional techniques are classified into budgetary control techniques and non-budgetary control techniques. Budgetary control. Budget is a very useful control technique. Budget is a plan of firm's expectations of the future. Budgetary control starts with the preparation of budget followed by performance analysis to find gap between planning and performance. The following are the types of budgetary control techniques. There are four major categories of budgets: functional budgets, transaction budgets, activity type budgets, and time interval based budgets. So it has to be prepared in the form of a chart. Functional budget, there are 8 types of functional budgets. First type, sales budget, production budget, material budget, labor budget, manufacturing overheads budget, administrative overheads budget, distribution overheads budgets, and cash budget. First type of functional budget is sales budgets. It is prepared by sales department and it measures the sales in the budget period, usually 1 year. And the sales budget is measured by the sales manager. Production budget, it is prepared by the production department and it measures the quantity of items produced in a day or in a week or in a year. And it is aimed at maximizing productivity within the production system. Third type of budget is material budget. It is prepared by the purchase department and the production material budget measures the raw materials used for production and it also measures the spare parts used for maintenance works. Fourth type of functional budget is labor budgets. It is prepared by the HR department. The HR department measures direct and indirect labor utilized in the production work. It also measures the cost associated with this labor. And the fifth type of functional budget is manufacturing overheads budget. It is overheads means expenses and it does not include the direct production cost. It includes indirect expenses such as electricity charges, premium paid, insurance premium paid, and consumables used, etc. Administrative overheads budget, and these are all the indirect expenses used for the salaries of office staff, stationaries and office expenses, etc. And the seventh type of functional budget is distribution overheads budget, and these are all the indirect expenses required for distributing the product. It includes expenses required for selling and distribution. And distribution overheads budget includes advertising expenses, sales promotion expenses. Sales promotion means giving offers for selling their products, and transportation and service expenses. And the eighth type of budget is cash budget. It includes sum of all functional budgets in monetary terms. So in the budgetary control, first major type is functional budget. It comprises 8 subcategories of budget. Second major categories of budget is transaction budget. And the 2 types of transaction budgets are operating budget and capital budgets. Operating budget means the current operations of the budget is known as operating budgets. It includes a monthly gas budget. Second type is capital budgets. Capital budget includes estimated expenditure on capital items. Capital items means that is land, machinery and equipments. These are all the capital items. That expenditure required on the capital items is said to be the capital budget. So the third major category of budgetary control technique is activity type budget. There are 3 categories: flexible budget, fixed budget and master budget. Flexible budget, by the name itself, it is flexible and it can be changed over time, and it gives the changes in expenditure as a result of changes in volume of production. And fixed budget does not change with the changes in the production. A fixed budget is prepared for a small period of time. And master budget, it includes the sum of all functional budgets. And the fourth type of budgetary control technique is time interval based budget. There are 2 types: periodic budget, continuous budget. Periodic budget, and it covers a specific time period for a month or for a year or for 6 months. So it covers a specific time period. Continuous budget, so it does not have any time period, it is prepared continuously. And based on methods, budgets are classified into zero based budgeting and program budgeting. Zero based budgeting starts from zero and it is constructed from a zero base. That is, in zero based budgeting, budget allocations of last year are not taken into account, and only it is starting from zero. It is very important. Zero based budgeting is very important. And program budget, it is concerned with the resources required for the specific time period. It is mainly used in government. So these are the major categories of budgetary control techniques. Then in the non-budgetary control techniques, there are 7 types: personal observation, statistical data, special reports and analysis, break-even analysis, operational audit, financial statement and ratio analysis. First one, personal observation. So by the name itself, it is observed by the manager, and the manager observes and gives control on the issues, and observing the performance whether it is going according to the standards or not. So it is a direct and indirect method of control. So it cannot be used as a main control tool, but managers can use personal observation as a direct tool. And one of the main disadvantages of personal observation is it is subjected to bias. Second type of non-budgetary control technique is statistical data. So managers are interested in presenting this data in the statistical form, such as charts, tables, ratios, percentages, standard deviations, correlation and regression coefficients. Managers uses statistical data to control areas such as marketing, statistical quality control, inventory control, etc. Third type of non-budgetary control technique is special reports and analysis. That is, manager get reports on all problem areas. The reports are obtained on daily basis or on the monthly basis or on the yearly basis. So these reports and its analysis tells us the issues present in the situation, and they can make actions to control the situations. Sometimes specialists are employed to give reports on specific problems. Then fourth type of non-budgetary control technique is break-even analysis. The break-even analysis, the graph is shown in figure. The units sold or volume of production is shown on x-axis, and revenue or cost is given on y-axis. That is, on the right side you can see fixed cost and variable cost. Fixed cost, the cost required for land, equipment and machinery is said to be the fixed cost. It will not vary. So it is shown by the dotted line. And variable cost. So the variable cost, it starts from the that is the variable cost, it is above the fixed cost. So variable cost means the cost required for consumables and stationaries and other expenses. It is said to be the variable cost. It varies with the volume of production. And if you plot the cost, the total cost line, so the total cost line starts from the fixed cost, above that fixed cost, and it crosses a break-even point, and it goes to and it is at the bottom of is a cost line, and the income line or revenue line is also plotted, and the income, when the volume of production increases, income also increases, and when it crosses a break-even point, up to the break-even point there is loss, and whenever it crosses a break-even point there is profit. This is said to be the break-even analysis. So fixed cost, variable cost and total cost. Total cost equal to fixed cost plus variable cost. This is break-even analysis. Then fifth one, operational audits. Audits are also conducted as a non-budgetary control techniques, and periodically the audits are conducted to check whether the things are going in the right direction or not. And financial statements, cash flow statements, fund flow statements, trial balance and profit and loss statement and balance sheets are used as a financial statements as a non-budgetary control techniques. And ratio analysis, liquidity ratios, solvency ratios and activity ratios are also used as non-budgetary control techniques. Thank you.